All right, y'all. I want to talk about this long trade that I took because I think it presents a good opportunity to give an example of how I look for a trade and how I actually then pull the trigger. So this is a position that I am currently still in right now. This long trade is up about 30%. I actually did add a little bit to the position because when I originally got into it, I was actually waiting for a little bit lower, so I had to kind of FOMO market in right here, as you can see. So my entry has come up a little bit from my original entry. But this is one of the trade setups that I actually was looking for since Sunday. So on Sunday, I posted this setup right here, looking to take a long if we lost 18,859 with bullish divergences, very specifically on the 24-minute and the 12-minute, right? This is the VIP Discord where I post my trading plans every single day. And then also last night, I said, look, I'm still looking for a long from this green box, right? We hit a few scalps on the way down, and I was still looking for this area. Now, what I want to, I guess, prioritize right now is something that is so important. When we are looking for trades, we always want to, number one, understand the context of the market, and then number two, understand when we are looking to pull the trigger. So to understand the context of the market, what we have to do is we have to basically buy low and sell high. Okay, now when I was a young lad, my grandfather would sit on the porch and he would tell me, son, actually, he sounds a little bit more like this. He would say, son, let me tell you a thing or two about investing. Investing's easy. All you got to do is buy low, right? And he would squat down halfway with his bad back on the steps and hold a giant wad of cash down there. All you got to do, son, is buy low and then sell high. My grandmammy would be looking in the background, knitting her little crochet thing, crocheting back there. She'd be like, yep, that's right. Now, how do we identify what is high and low? This is very, very important. The way I like to do it is simply by looking at two things. When we pull up a chart, we need to be looking, A, is there an area where I clearly see price has found support in the past? Right? That's the first thing that we're going to look at. Just by looking at this chart, we can see that there are two places within the past few weeks since September 29th that price has found clear support, right? Price has found clear support at this area. And what you can simply do is just draw a box at that low and tell yourself, this is an area that is low. And I need to look for other confluences, other things that point to this area that could potentially get me into a long trade from this area, okay? The next thing I like to do after I look at what I can just visually see with my eye, we can mark out a few areas here. Let's mark out a few areas, actually, right? So we can mark out that as a key area. We can mark out this as a key area because going all the way back to the 6th of September, we can say that this is a key area. So now we have these key zones where we're looking for trades, right? Now what we have to do is find other confluences. So some of the things I really like to do is I like to use volume and Fibonacci, right? Volume. I like to see where is the volume telling us that most of the trading has taken place. So for this specific trade, you can see that I was looking at basically this sideways price action between the Tuesday, September 13th, and our present day. And I was just looking at this, and what this is doing, if anyone doesn't know how to get this, you come over to prediction and measurement tools, come down to fixed range volume profile, and you just want to look at price action. That's how you determine where to drag this through, right? You're just looking at price action, and you're telling yourself, okay, I want to try and find a sideways market, sideways range that I can see with my eye, and then I want to analyze the volume here, right? So I'm going to come down here and just analyze the volume that traded within the sideways market. Now, what this is doing is this is establishing a fair value for us, right? Anything that is outside of these shaded candles is considered overbought, and we always look for a short trade there. Anything below this blue line here is considered oversold, and we look for a long trade. Now, remember, we're looking for confluences. So right now I can see that we have a pretty nice confluence in the green box that I drew with my eye, with this value area low, right? Boom. We have ourselves a confluence. Now, is this the only confluence at this area? No, there were other confluences here as well that I did mark out in the VIP Discord. And by the way, if you do want to join the VIP Discord, you can go to patreon.com/Jason Casper. Also, if you want to learn all this technical analysis stuff, there's a 35% discount on the trading course, jasoncaspertrading.com. This will give you the blueprint to become a confident, profitable trader because we give you that point A to point B system so that you know where you're looking for the next trade, right? It kind of goes way more into depth of what I'm looking at right now, right? So what we're doing is we have found now a level where there are two areas of confluence. Confluence 1, I just am using my eye. Confluence 2, it's the value area low where price is oversold, right? So now that we have our level, what we have to do is we have to understand what confirmations are we looking for, right? So I was looking for bullish divergences on the 24-minute and the 12-minute time frame. Why those two time frames? The 24-minute and the 12-minute time frame I like to use when we are trading sideways ranges because they will tell me when the bottoms and the tops are in, right? Let's just take a look at what happened here. When we hit our top, what did we see? We saw bearish divergence on the 24-minute time frame, right? In fact, every top that we put in here, we had bearish divergence on the 24-minute time frame, right? Even this top right here, we had very bearish divergence on the 24-minute time frame. So what is a bearish divergence? A bearish divergence is where price and momentum are doing the opposite thing. So our oscillator is printing lower highs while our price is making higher highs. That is a bearish divergence. And we can see these bearish divergences on the 24-minute time frame every single time we come to the top of this range, right? And the opposite is true when we come to the lows of the range, right? We are getting bullish divergences where price is making lower lows, momentum is making higher lows. Every single time we put in a significant bottom, right? Not this time, but we did right over here, right? This is a very clear bullish divergence. And so what we're doing is we're identifying areas of confluence where we can look for a long or short position, and then we are looking at our indicator. And it's important that we have these things planned out in advance. Why is that? It's because most traders trade based on emotion, right? But I just came here and back tested probably about 6 instances where just by identifying high and low using your eye and volume and then looking for divergences on a specific time frame, we have had many, many, many profitable trades within this range, right? And most of these trades were setups given in advance because we're ready for the levels and we are ready with the confirmations, right? And so this is a prime example of getting into potentially what could end up being a swing long trade. Why could this be a swing long trade? Because when we come down to the bottom of a range, we then will look for first a move to the center point and then a move to the top. So I have take profit set at about 20K because that is the high of this range. And then if we break 20K, I will look for higher targets based on other indications that I have, right? Now, shout out to everybody because I actually gave this setup. I literally gave this setup on YouTube for free, right? I gave this setup on YouTube for free earlier this morning because I was just looking at volume here and saying, look, if we come down to this area with bullish divergences, that's where I will be looking for a long trade from that area, right? We were looking to come down to that box right down here and get a bounce from it with our bullish divergences, right? So this is why you got to like the video. That's also why you have to subscribe to the channel because there are very few channels out there who are giving this kind of information away for free, guys. Also, if you do want to join the Discord where we have a great community of traders posting the juiciest technical analysis, you can go to patreon.com/Jason Casper. We have some of the best traders in the world in here, and I mean that with all my heart. These guys are amazing. Again, we do have a 35% discount on the trading course at jasoncaspertrading.com. Also, if you want to learn how to use an order flow chart like this, me and Boyan is one of the traders in the VIP Discord, put together this course learn.jasoncaspertrading.com. You could check out the preview for free, but there's also a 35% discount on this course in the pinned comment. These are valuable resources, guys. So that's kind of it. I just wanted to go through this, guys, and I want to encourage anybody who's having trouble out there being profitable, because for me, one of the biggest things that stopped me from being profitable in the beginning was not sticking to a plan, chasing price, and getting wrecked, instead of waiting for the price to come to me, right? You need to be chilling out, waiting for the price to come to you, right? You can't be out there trying to chase price. You have to sit and wait patiently, and the price might not, but there's a good chance that if you see a juicy area of support that the price will come there, right? There's a very good chance. And then you can just sit there waiting to strike, and I guarantee when you do that, you're going to be profitable, because you are then going to get the move, right? A nice quick move, lock in a nice quick profit, right? A nice $600 or more profit that I could take right here. And then that's it, and you're good. Get out of the trade, stop loss to entry, lock it in. If we pump, you still have a portion of the position open. If we dump, well, you can either hedge or enter a different position, or just get out of the trade and wait for the next one, right? So that's it for today, guys. Wanted to come in and make this video. Make sure to like the video. Make sure to subscribe to the channel. God bless everybody in the name of Jesus the Messiah. I pray everybody watching this is very blessed in multiple ways. And I'll see everybody in the next video. Peace.